Would you like to have an indicator that exactly shows reversal points of the market? Look at this reversal signal and the market turned up. Or look at this one, reversal signal and the market turned down. To add this amazing indicator to our chart, here we click on indicators and we search enhanced wave trend oscillator. This one, which is written by someone named Eli Cobra. Alright, this is the oscillator, and as you can see, it is added here below the chart. First, I explain different components of this indicator and how you can use it for trading, and then I will teach you a very accurate trading strategy based on this indicator. So make sure you watch this video until the end and you don't miss any important point about this powerful indicator on TradingView. This indicator is a modified and improved version of wave trend indicator, which is a very popular indicator, especially for identifying overbought and oversold conditions in the market. In this new version, for the estimation factor, it uses the standard deviation of the price, which makes it more dynamic and accurate, and also z-score calculations are applied, which is a statistical method for better and more accurate results. And finally, a smoothing technique is applied to generate this wave trend oscillator that you see here on this chart. This ribbon that you see here is actually our wave trend, including wave trend line and smoothed signal line of the wave trend line together in the form of a ribbon that you can see. When the wave trend line crosses above the signal line, the ribbon becomes blue and it is a bullish signal telling us that the upside momentum is gaining strength. And when the wave trend line crosses below the signal line, the ribbon becomes pink and it's a sell signal telling us that downside momentum is increasing. These crossovers are showing momentum changes in a very short-term perspective, and it is also reflected here in the middle of the indicator in the form of this histogram that you see. These momentum changes are not very good signals for trading because you can see that it is very responsive to the price action and it changes with every momentum change that are happening in the market. They can be used as buy-sell signals, for example, in trend following strategies and taking only the signals in the same direction with longer-term trend of the market, but it is needed to be fine-tuned carefully so many of the false signals are avoided. As I mentioned earlier, this indicator is more suitable for identifying overbought and oversold and so reversal strategies, which I will explain later in this video. Alright, this ribbon can also show direction of the market and changes that are happening in the direction. When the ribbon is above the center line, the market is trending up, and when the ribbon goes below the center line, the market is trending down. But in terms of center line crossovers to provide trading signals for beginning of trends, it is very prone to generate false signals, especially in the pullbacks like this one or this one, which was just a pullback, or this one, which again was just a pullback. Of course, you can increase the length of moving averages in the settings that makes it smoother and less responsive to the price action, but again, just like any other oscillators, when it comes to center line crossovers, you should never take your trading decisions only based on these signals, and you need more confirmations from other indicators or aspects of technical analysis that there is higher probability that a new trend is actually forming on the chart. Alright, now let's get to overbought and oversold signals. As you can see, the indicator has marked this area for overbought and this area for oversold. And when there is a significant oversold or overbought signal, the indicator gives buy-sell signals by the help of these small circles, which are forming here in overbought or oversold areas. Pink circle for overbought, and you can see that we got a perfect reversal to a downtrend, and on the other hand, blue circles for oversold, and you can see that we got a perfect reversal to an uptrend. But this is not always the case, and you can have a trading range after the signal, or worse than this, you just get a pullback after the signal. Please pay attention that when we have a oversold or overbought signal, it means that the prior trend is weakening and there is a probability for having a reversal. This weakness can be just a temporary weakness, and after that we can have just a pullback like this case, or the market can go to a trading range like this case, or an instant reversal can happen like this case here. So when there is an overbought or oversold signal, three situations can happen. We can have an instant reversal, we can have a trading range, or we can just have a pullback. So the safest interpretation when we have overbought or oversold signal is that the prior trend is weakening. That's it. And for any trading decision regarding reversal in the market, we need more confirmation from other indicators or aspects of technical analysis that confirm higher probability for reversal. For this purpose, here we click on indicators and we search RSI, this one, relative strength index, and we use mix of RSI and this indicator and also price action analysis. Whenever we have a reversal signal from this indicator in RSI at the same time or before that, we should have a divergence. For example, here you can see that the price made higher high, but RSI made lower high. This is a bearish divergence, telling us that the upside momentum is weakening and downside momentum is gaining strength. In the next step, we mark the lowest point in divergence pattern, which is here, low of this candle, and we wait for the price to break this level, which happened here by the help of this candle, as you can see. So the bearish reversal signal is confirmed and we can enter a short position at this point when this new candle is opened. The stop loss is placed above the previous swing high and you can see how the price declined down to this point, which created a very profitable trade. And now here, following this downtrend, you can see that we got a reversal signal at this point, but when we check RSI, we can see that RSI didn't make any divergence, so we don't take any action here at this point. And after that, again another reversal signal from this indicator, and when we check RSI, we can see that there is a divergence. The price made lower low, but RSI made higher low. This is a bullish divergence, telling us that the downside momentum is weakening and the upside momentum is increasing. In the next step, we mark the high of the divergence pattern, which is here, and we wait for the price to close above this level, which happened here by the help of this candle. So the bullish reversal is confirmed and we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low, and this is also a very profitable trade where the price advanced up to this point where we got another reversal signal at this point. When we check RSI, we can see that there is no divergence, so we don't take any action for this signal, and you can see that the signal is correctly rejected because after that the market went to a trading range. Moving on the chart, no signal around here up to this point where we got two reversal signals. For the second one, you can see that RSI is showing divergence. This is a bearish divergence because the price made higher high, but RSI made lower high. So RSI is also telling us that there is a probability for reversal. So we mark the low of the divergence pattern, which is here, but you can see that the price didn't close below this level. So the signal is rejected, and it was a correct rejection because this was just a pullback, and after that the price advanced more. Please pay attention that this trading strategy is very accurate because you enter a trade only when you have a divergence signal from RSI and then reversal signal from wave trend indicator, and then you enter a trade only if there is a market structure shift which more confirms that a reversal is happening in the market. But this doesn't mean that you will not encounter false signals. No, this is not possible, and losing positions are always part of the game, and there is no trading strategy with 100% guaranteed signals, so you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.